So the S&P is the second from the left. So what we're doing here, what we're looking at here, is the S&P. It's about to go. All right, so we're starting to see some flows come into it. The market's bidding sort of up to 40s, up into 43, pulling back down. All right, testing down into, where are we now, 37s, a bit lower now, 36, 35s, 34s. I tried to get in there. I think that might have been a 50% pullback, and I was like, okay, I'm willing to give that a go. All right, then the market's bid back up to sort of like 39s, 40s. All right, now coming back, sort of 37s, 38s, region down to 36s, down to 35s, it got long in there. I was like, cool, that's, I think, even lower than the last pullback, and here I was expecting the market to hold. Now it didn't hold, like, this is my first kind of like trade management clue. So the market's pushed a bit deeper than I wanted, down into 33s. So this wasn't ideal, but then it also like, it was still holding there, and I was expecting it to hold this rough region anyway, and so I was willing to kind of like give this a bit of space. So already the fact that it pushed a bit deeper, that was like the first trade management clue, right? I expected to have seen the market come back and get picked up and people to start buying this, you know, like anyone who's short to start getting out, and then if people wanted to start getting long on this. Now I suppose the other thing is like, the ECB was a bit hawkish, so maybe that's a little bit of weight on equities. But then these are the US equities, not the European ones. I don't know. I suppose you can weigh that up yourself. But so now the market's back to where I bought, but that's kind of where it was holding on the first pullback. We really just want to see if this market start to bid, and we can now. So we've seen the market heading back up sort of towards 40s. All right, up to 39s. And so this is where the market tested up to before and then came back for its sort of like second leg of the pullback, or second test back. And we just want to see if this market can bid through. So there we go, it's gone through 40s. Sorry, it's just going to recenter in a second. I was just putting a stop in. And I did that just because I wanted to be watching the Bund as well, just over the ECB, so trying to multitask here, so I just wanted to have a stop in. So now you can see the market's pushed above 40s, and now we just want to be thinking about, all right, what's this bid like? And so here we go, it's sort of nibbling higher up to 42s, back to sort of 41s, up to sort of 41 and a halves, 41 and 3/4, 42, 42 and a half, 42 and 3/4, 43s, 43 and a quarter, 43 and a half, 43 and 3/4. So it's like edging high, but it's not really like ripping high. There you have 44s, 44 and a quarter, up to 45s. And again, this will center in a second. 45 and sort of 3/4. So what I didn't like about this price action as well, as I sort of said before, it was like edging higher, not really kind of like ripping higher or being kind of like aggressively bought. And so then just thinking in line with, you know, the fact that we had that pullback before, you know, that went a little bit deeper than I was expecting. It wasn't saying the trade was wrong. It was just sort of saying that maybe this market's not as strong on this number as I maybe had expected. So you can see here the market's now sort of edging up into the sort of 46s, back down to 45s. I'm looking to get out here. There we go, and I'm out. And so one of the things here was that, you know, as I said, that pullback and the way it was bidding, they weren't great. So the trade idea I liked, but then the way the market was behaving once I was in the trade wasn't so good. It wasn't this like really aggressive, healthy bid. And so I was thinking, okay, well, as this sort of price action starts to fade, I need to look at getting out. And that's exactly what I did. And yeah, that was it really. And so now the market pulls back a little bit, has another test higher, can't take those highs it just made before, and then starts to come off. So let's just go back to the charts. Now, what we have here is the 15-second chart, and as we saw before, just to go over that, the first rip higher, pulls back, tests up, pulls back a little bit deeper. This was my first question mark, sort of edging higher but not really aggressively, and then sort of struggling at the highs, and then it was like, well, okay, and another this isn't quite what I wanted, let's just get out here, and then the market pulled back. So that was the trade management, just again repeated on the chart. So basically what's really great about this trade is it literally is just seeing some poor structure and then having a reason to, or like poor positioning and then having a reason for that positioning to unwind. What's really important about having both of those things is that, you know, if you've just got poor positioning, that's not necessarily a reason for them just to get out, so anyone short to get out. And if you've got this reason for the market to bid, it's not necessarily enough just to go. So, you know, if you want to have edge in your trade, you kind of want to have more than one reason, and that's it. You know, you just had two really simple reasons here, and that's the beauty of this trade, so simple. Now, just, you know, in terms of being a little bit more specific here to this trade, it's important to keep track of how markets are responding to data. So in order to do what I did here, you need to be tracking that, you know, is the market equity still bidding on inline prints? And then, you know, then also understanding the structure. So here it was just understanding the market had this vulnerable positioning. You put those two together, you have news that triggers the positioning to unwind, and that is it. So yeah, this is a really simple one that hopefully, you know, you can all think about, you know, how it might fit in with what you're trading, and then look for opportunities like this.